Central banks are buying it up, and the gold's flooding into the United States because of the tariffs. And that's why you're seeing gold prices go up and beating out Bitcoin right now. I would have never thought this would have happened. I thought gold prices would have gone down a bit under the Trump administration, but it's gone the other way. And we said it, of course, we changed that forecast about a week ago and said it's going to keep going up. But it's up $8 today, $2,863 an ounce. When we made that forecast, gold was $2,041 an ounce. Gold is shining now, and it's taken some of the shine away because there's a reality out there of how bad things are.
In today's news recap, central banks' insatiable appetite for gold is firmly entrenched. Central banks have started the new year exactly as they ended 2024 by increasing their gold reserves. Krishan Gopaul, senior analyst for EMEA at the World Gold Council, was active on social media Friday, documenting central banks' gold purchases last month. The day began early when Gopaul noted that China once again increased its gold reserves in January, buying 5 tons of the precious metal. Analysts have been particularly focused on China. This marks the 3rd consecutive month that the People's Bank of China has increased its official gold reserves, following a 6-month pause after an 18-month buying spree. Last month's purchase helped lift gold reserves to 2,285 tons, Gopaul said. Although China has significantly increased its gold holdings, the yellow metal still accounts for only about 5% of its total foreign reserves. Analysts suggest that there is ample room for China to raise its gold holdings to 10%, bringing it more in line with other developed market central banks. China wasn't the only country buying gold. Gopaul noted that data from the National Bank of Poland shows it purchased 3 tons of gold in January. This lifts its total gold reserves to 451 tons, 26% higher than in January 2024 and 97% higher than in January 2023. Gopaul said. Poland was the top gold buyer last year, with its national bank increasing reserves by 90 tons. Elsewhere in Europe, Gopaul reported that the Czech National Bank also purchased 3 tons of gold in January. Its gold holdings now total 53 tons, 63% higher than at the end of January 2024, he said. Gold now also accounts for over 3% of total international reserves. Finally, Uzbekistan was the biggest gold buyer last month, with its central bank purchasing 8 tons of gold. Sovereign purchases dominated the gold market last year, with central banks collectively buying 1,045 tons of the precious metal, according to the World Gold Council's annual and 4th quarter trends report. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
You look at the markets today. Let's see the stocks today. The Dow down 444 points, almost 1%. NASDAQ down almost 1%. No, the NASDAQ was down 1.3%. The S&P down almost 1%. And a lot of this, they say, I'll be announcing the next week reciprocal trade so that we're treated evenly with other countries, said Trump during a meeting with the Japanese prime minister. So then you saw the treasury yields went up to 4.5%. That's going to hit mortgage rates, keeping them high, and that's going to keep the housing market down. So those are the facts. Consumer sentiment fell in February to 67.8. The Dow thought it would be at 71.3. And you know what they're worried about? Inflation. That's right. Amazon was down 4%. The company called for revenue growth of 5% to 9% in the first, blah, 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 the weakest growth quarter on record. But again, it's only the rich getting richer. And again, if you're not a billionaire, shut your mouth. You have no right to talk. I mean, look at that fucking picture with all those little clowns in front of Trump at his inauguration. A little peach eye with a Zuckerberg. One little clown after another. Bezos. All these little freaks around him. All these tech geeks. So shut your mouth. If you're not a billionaire, you got no right to talk. So what else here? Oil, it went up a little bit, but it's still way down there, $74 and 66 cents a barrel for Brent crude. And so it's the tariff issue. We see what's going on. The Bank of England, by the way, yesterday lowered rates. Today, the Bank of India lowered interest rates. The economies are going down. You know, subscribe to the Toilet Paper Record. This is how they call it. Bank of England cuts rates as growth lags. What lags? The fuck are you talking about? It's dragflation. You got high inflation and you got a declining, there it is. You got a declining economy. You know, it's a 4.4% inflation. And the economy's down. How about, but anyway, that's the shit they're selling because they don't want to tell people how bad things are. They want you to keep gambling in the markets. DeepSeek's rise jolts power section. This is from the Wall Street Journal. Companies' efficiency gains raise fears that AI boom won't bring surge in energy use. And what's the cover of this week's magazine? You got it. .com bust. And it's not only DeepSeek, it's Deep Freak. Yep. This is, again, trends are born, they grow, they mature, reach old age, and die. This AI trend's just been born. So this is like inventing a car, like let's say 1910, went from horses and carriages to cars, whatever year, you know, the early. So you think we're using the same engine? So that AI engine that NVIDIA invented with those big chips that you needed a lot of power for, you don't need it anymore. Oh, and by the way, now they're banning DeepSeek in a number of American allied countries. I can't say the word. Anyway, remember the H-1B visa story that they're bringing in from China and India? They have advanced technology people over there. It's not only America. All right? This is going to bring down the markets. And all this overinvesting in the energy companies and in the AI companies that are just starting up that don't have anything going, we're very concerned about it, and we believe it's going to happen. You had, for instance, Constellation Energy sorts its shares rise more than 400% since its spinoff from utility company Exelon in 2022. And that's according to the Wall Street Journal. And on Wednesday, the Commerce Department reported that the U.S. trade deficit widened to almost $100 billion in December. All right? So this is serious. And you're looking at, you know, every week almost, we've been putting in what the luxury markets are doing. You see what's going on with Gucci. It's going, you know, poof, one after another because what's going on globally, particularly in China. So they're losing a lot of sales. This thing is very serious. They're going to keep lowering interest rates. And the United States, is, even though Trump's congratulated the Feds for holding interest rates on last week, we believe he's going to push to lower them, particularly as the global economy goes down.
In today's news recap, China to start trial for insurers to invest in gold. China's National Financial Regulatory Administration revealed on Friday the initiation of a trial program aimed at integrating insurance funds into gold investments. As per the organization, this initiative, named the Pilot Program of Insurance Funds Investing in Gold, is designed to broaden the channels for the use of insurance funds, optimize the insurance asset allocation structure, and promote insurance companies to improve their asset liability management level. Additionally, the agency stated that it will diligently monitor the advancement of this pilot, reinforce regulatory oversight, and foster the growth of insurance funds investing in the yellow metal. What do you think of this? Is the master plan being revealed in front of us and no one is paying attention? Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Central banks, right? In its annual fourth quarter report, Global Demand Trends reported that the World Gold Council said total physical gold rose to nearly 5,000 tons for the year. Yep. Central banks are buying it up. And the gold's flooding into the United States because of the tariffs. And that's why you're seeing gold prices go up and beating out Bitcoin right now. I would have never thought this would have happened. I thought gold prices would have gone down a bit under the Trump administration, but it's gone the other way. And we said it, of course, we changed that forecast about a week ago and said it's going to keep going up. Yep. What else? Oh, the job creation numbers came out. And they were much lower today than expected. And here's the jobs, according to the Bureau of Labor Statistics, that were added. Healthcare and social assistance, the leading category, 66,000 jobs. Healthcare and social assistance. And then retail trade. All low-paying jobs. And then the next one were government jobs. All these little slobs, slimers, bureaucrats. You're stealing our dough and doing nothing, not producing anything. So government jobs only equal up to zero, stealing our money. And by the way, I'm totally supportive of Trump breaking up the federal government, getting rid of all these stupid jobs. I totally support it. And I also support tariffs, by the way. I want it made in America. So can't stand what he's doing with the Gaza stuff. You know, disgusting. But I'm just saying the way we see it. So overall, net job growth was 143,000. So you're seeing a decline. And by the way, restaurants, they shed 15,700 jobs in January. This is important. I've been talking to a number of people, not only in the restaurant business, but to deliver stuff. It's so costly to go out to a restaurant anymore. So people can't afford to go out. And you're seeing the reports coming out. So the markets are going to go down. They're going to do everything they can to pump it up. But when all those fails, they take you to war. Remember that. Option traders bet tech stocks rally will last. That's the Wall Street Journal. We say the opposite. And then this was from Bain & Company. Global M&A market poised for a comeback in 2025. Yeah, the bigs are going to keep getting bigger as interest rates go down and cheaper to do more deals. And we just become more plantation workers of Slavelandia as they keep getting richer. And, L'Oreal's quarterly, slowest since the pandemic. Anyway. China firms bleed cash as a trade war looms. That's the Wall Street Journal. Bleeding cash. The Chinese economy is going down big time. They're having real problems. It's a global slowdown, and it's going to get worse.
What's your take on Celente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.